Welcome everybody. I have a special guest with me today, Chris Horlacher, CEO and co-founder of Equibit Group. We're going to be doing a deep dive into a lot of the Canadian startup founders and influential people in the space, in the blockchain space. Chris, how about you start off by telling me a little bit about yourself and how you got into Bitcoin, how you got into digital currency, how you started Equibit Group.
Absolutely. I guess it all started in about 2010, and at that point in time, two important things in my life had happened. The first thing was I had just discovered Bitcoin. The other thing that happened was at the age of 29, I was offered a job as CFO of a stock brokerage. They were from the United States and they were opening up a Canadian branch. And so I was lucky enough to get the job, and off I went from my job at Deloitte & Touche as an auditor to take on the CFO role of a financial institution. So there was quite a learning curve involved, and it gave me a deep look into the foundations of the securities industry. And what I discovered was that it was structured very much like the banking industry. There are a lot of support systems underneath the exchanges and the brokerages that mimic the roles that things like central banks and clearinghouses do. And in the securities industry, these are called depositories or CSDs and transfer agents. And at the end of the day, they're essentially vaults with piles and piles of securities in them and a bookkeeper that figures out or keeps track of who owns it, what that's inside the vault. And then the brokers and the exchanges make markets, advise investors, and execute trades. And the biggest pain point in my job as the CFO was dealing with these depositories and transfer agents. They were very expensive, very slow, and very much still on a legacy paper-based system. And so in light of what I had just seen in Bitcoin, I thought, hey, if we can modify this protocol and introduce 2 or 3 more things to it, it could function as a securities register. And we could quite possibly take CSDs and transfer agents out of the equation in terms of building a new securities market. And so that was the beginning of the idea. In late 2013, Bitcoin hit or crossed $1,000 US for the first time. I think it was a $10 billion market cap. So, the good old days.
Yeah.
And so at that point, I decided it was time to start building this, because cryptocurrencies had at that point proven themselves, to at least my satisfaction, that they were secure systems, they were stable, scalable, and unlikely to go anywhere, at least for a long time. So that was when I decided to start writing the white paper, recruited a few other co-founders into the mix, and in 2015, late 2015, we incorporated Equibit Group.
Yeah. So tell me about this team. You have how many people working on Equibit right now?
Including myself, we have 6 full-time members on our payroll. We have another 2 full-time contractors and 4 part-time contractors.
Wow, okay. And so where are you at in the roadmap of this project? Like where do you see this going in the next 6 months? How far have you come in like building out this system, and where does it go from here?
So Equibit Core, which is the software that will allow people to set up a node, is about ready to release. We're putting it through its final phases of testing, and we're getting things set up to distribute the software to a select group of miners. So we're going to distribute the software first in a sort of a soft launch style event, and we're going to privately build up the network's hash rate, because we want to protect it against any kind of miner-based attacks after we launch. And we've already I think we've had 50 inquiries from miners, large miners. 35 have signed on to mining Equibit now. So that group is growing quite quickly, and we're pretty happy with the progress there. Once we finish testing the core, we're going to be releasing it to that group, at which point then we will follow up with the release of Portfolio, which is essentially the user interface. It's the wallet. And that's designed for people who want to use the Equibit network but don't necessarily want to get involved in mining it. And so those 2 apps are our core products, and both of those we anticipate to release before the end of Q1 this year.
Very cool. Okay, so tell me a little bit about, we talked about this off camera, but tell me a bit about how this network is built and how it's tied to the Bitcoin protocol in some aspects, but it's slightly different in others. Can you explain that and just how it all works?
It started just by forking the Bitcoin code into our own repository, and that's not like a blockchain fork where we split the chain. We just take a copy of the Bitcoin code, put it in our own GitHub repository, and modify it from there. So you could think of Equibit almost like a patch to Bitcoin that adds a whole bunch of new functionality. It's not the Bitcoin blockchain anymore. It's got a new Genesis block. We just mined that a little while ago, and we embedded a neat little story in it for all of the miners to find once they get started. And yeah, so that's it's essentially a modification to the Bitcoin protocol. And we chose Bitcoin because, as I said, it was the most tested and proven blockchain. And if nothing else, the securities industry is concerned always with security.
Sure.
We're dealing with people's money, and this is not Facebook, or an app that runs, your email. This is an app that runs the heart-lung machine that keeps you alive.
Yeah.
So it absolutely has to work.
Wow. Okay. So why was it important then to make these modifications to the Bitcoin protocol? Like, why is it for Equibit? Why do you need to have these modifications in place?
So the unit that is created on the Bitcoin system, called Bitcoin, is completely fungible. One Bitcoin is exactly the same as another Bitcoin, and there really isn't any way to embed information into a Bitcoin that would make it a unique representation of something else, something off-chain, like stock in a company. So one of the first modifications we did was we changed the transaction structure of Bitcoin to allow the embedding of information that would carry the attributes of a security. So when you're using Equibit and you want to register a new security in the system, you basically have a menu, and you can pick out of that menu preferred shares, trust units, fund units, common shares, debt. So you have all of these securities, which captures most of the world of equity and debt in it, and you're able to register securely unforgeable securities in this system, which will then trade around the network or not, because we have a transfer restriction system as well. But that's a whole other topic. And the other thing that issuers need to do is they need to also be able to communicate with their investors.
Right.
They have to send AGM meeting notices out. They have to poll their shareholders. And there's a lot of back and forth communication between the issuers and their investors. And so Bitcoin had nothing for that. But fortunately, we have, the Bitcoin creates a great public key infrastructure that we could leverage to create a communication system that piggybacks on the same cryptography system that is used in the value transfers in order to also exchange messages. Because if you can exchange value, you can also exchange information, because it's basically one and the same now. Gotcha.
Okay, so companies will be able to issue not only equity but debt on this network, correct?
That's right. Yeah.
So what do you see as this is all very new still, and I assume that there's a lot of hesitation from companies that are not blockchain related to put securities on blockchain. What do you think are the main issues that need to be overcome for adoption of this network?
It's going to mostly be, just getting people comfortable with the idea that they are now on an all digital system. Fortunately, the securities industry has been making the push towards this very thing for decades now. Starting in the 1970s, we had the centralization and then dematerialization of securities. So this event is what created the CSDs that we now have. They centralize the ownership or custody of all of those stocks and bonds in the hands of these agencies, much in the same way as a central bank functions. So the digitization of these securities relieves the requirement to build safe physical buildings for the storage of these, basically paper. Now it's private keys and 256-bit encryption, which is, as far as I'm concerned, I think a lot of information security specialists will say 256-bit encryption is a lot better than steel and concrete.
Yeah, totally. Okay, so if I'm a company and I'm trying to issue equity, where do I see? Why is it better for me to be on Equibit? Where are my cost savings from a company perspective, and how does that all work for a company issuing securities on Equibit?
Well, the more widely held the stock is, the more expensive it becomes for that company to administer its issuance.
Okay.
So imagine the postage costs involved in mailing dividend checks out to 2 million investors. So these ongoing administration costs represent a huge burden for these issuers to take on, and it's part of the reason why a lot of issuers don't go public. At the same time, it's also the reason why some issuers go public who may not necessarily need to be public. They do it only to be able to access the liquidity that a public market provides.
Sure.
And this is because staying a private company, you suffer under a blanket of opacity. That market is very much run by the exempt market dealers, and information is very hard to come by unless you have special connections or subscriptions to expensive publications. So with a blockchain, that is all done away with because we have a completely transparent system that anyone with a node or even a wallet can access the data stream coming off of this network and see all of the companies, all of the securities, and all of the transaction history of all of the securities. So even something like Bloomberg is not necessary to the extent that these companies would be on the Equibit network.
Okay. So for a private company, do you think this is actually going to increase the number of private companies that try and create liquidity through public issuance, just because you've now lowered the barrier to entry?
I certainly think so, and that is one of the biggest market segments that we are looking at in terms of where issuers are going to be approaching the network from. The private markets are, as I said, they're opaque. It's hard to find liquidity, and it's very expensive because the transaction costs are very high. So those are three big pain points that the Equibit system is going to address and address in a very big way, in some cases bringing costs down by over 90%. So many of the exempt market dealers I've talked to and lawyers who deal in private securities are very interested in Equibit for that reason. Public markets will be a much bigger nut to crack. But fortunately, the reality is that most companies are private. The public markets are only about 5% of all of the companies and stocks and value that is out there and being traded every day. If you look at the volume that is traded on the New York Stock Exchange annually, they'll do about maybe $15 trillion of volume. A single transfer agent like DTCC or Computershare will process 1.6 quadrillion dollars of volume in that same year. So they are 3 orders of magnitude bigger than the exchanges. Now, when you look at those numbers, the volume of the exchange is also built into the numbers posted by the transfer agents. But still, 15 trillion versus 1.6 quadrillion is that's a 0.1%.
Yeah.
So very, very small compared to the private markets. We also considered the bearer assets market, which is slowly dying off, but it is nevertheless there. And the reason why it's dying off is because there's been so much problems with forgeries in it. And so with a blockchain, you can address that and make it impossible to forge securities. And so maybe we might see a resurgence from that corner as well.
Right. Okay. So there's massive opportunity in these markets for you guys. As far as decentralized security networks go overall, what's this roadmap like for companies starting to adopt decentralized securities networks and starting to push into this space? Like, how long will it take to start seeing major companies starting to get into the space? What's your thought on that?
Well, step one would be to make sure that you're incorporated in a jurisdiction that lets you set up your shares digitally.
Okay.
Fortunately, most of the world now allows that, and that's called uncertificated form. The Canadian or the Federal Corporations Act here in Canada explicitly allows for electronic share registers, and so whether that's an Excel spreadsheet or a blockchain shouldn't really make much of a difference. Now, beyond that, you may have to also consider your bylaws and what amendments may have to go in there before you finally execute your paper share for Equibit share swap with your investors, because all your investors will also need to be on the same network or use a broker or some intermediary that is.
Gotcha. And then finally, I just want to ask, what is the most difficult thing, the biggest problem that you guys are trying to solve right now that is holding you back, or what's the thing that is the biggest constraint right now for you?
For us, our biggest constraint is time and developers. You can never get it done fast enough. And we've been fortunate to work with some very, very talented developers. But in terms of people with hands-on experience with blockchain, it is still very hard finding quality developers out there. So
yeah,
it's a long search, and we've been fortunate to find some very talented developers. They haven't had direct experience with blockchain before coming on board, although we have a very good QA director named Christian Saucier, who has been a long-standing member of the cryptocurrency development community, and he's been our source of blockchain expertise for the development team and getting everybody kind of trained on the technology. And they have a lot of fun with it, and we find that they tend to show up in earnest. They really want to learn this technology because they see that this is the future, at least as far as payments or value transfers are concerned.
It's amazing. Well, thank you so much for joining us today. This was awesome to have you on the show, and I'm looking forward to seeing a big 2018 out of Equibit.
Me too.